Hello, everyone. I have the pleasure of being joined by Mr. Jim Wicklund. He's the Managing Director for Energy Investment Banking at Stephens. Thank you so much for joining us, Jim. I want to start off by asking you about recently, of course, we've seen oil prices bounce back some, at least out of the negatives. Is a celebration premature or a way of looking at survival really being optimistic?
Well, we bounced off minus 37.63, which was hilarious. And so $18 isn't a level that we should start throwing a party, but it's $56 better than it was 10 days ago. And to be perfectly honest, it's now starting to look like demand has, the demand destruction we've seen over the last couple of months looks to be flattening out. And so while the recovery may be slow, being in positive territory on oil prices, natural gas prices looking a little bit better with a little bit better outlook, and demand starting now to improve, even if gradually, and maybe not a full-blown party, but at least a celebration of a drink or two.
Yeah, warrants that. From an investment point of view, Jim, what is your assessment of current portfolios and business plans? What are you seeing right now?
Well, right now, the entire industry is in survival mode. We're looking at activity first quarter to second quarter being down as much as 75%. Now, that means companies' revenues will drop by 75% sequentially. And there is no industry, no company set up to handle that in a flawless manner. And so right now, companies are cutting costs, cutting expenses, closing facilities, laying off people, taking salary reductions at the top as fast as they possibly can. And that's back to the point is survive. If you can survive to fight another day, that's the goal. And that's the only mode companies are in today.
Do you see anything, whether it's clients or anybody that you're in talks with, about any business investment or interests internationally to try to cope with what's happening in the U.S. as far as business?
Well, I do. It's expected, like I say, U.S. to drop by 75% fairly quickly, whereas international, according to the Schlumbergers and Halliburtons of the world, they expect a decline in spending this year internationally of only 15%. So it will clearly be a much better market than the U.S. onshore market. And frankly, the offshore, you've seen where Diamond Offshore is going into bankruptcy, and $18 oil prices makes not even tiebacks in the deep water economic. So this has probably delayed the recovery of deep water by a couple of years. So onshore international is by far the best bright light, if there is one, in the industry today. And we've already talked to several service companies who are saying, okay, when we come out of this, what do we want to look like? And if we make acquisitions, because there are going to be a number of distressed sales as companies go through bankruptcy, do we want to buy something that's onshore U.S., offshore deep water, or international? And international is definitely coming out as the winner in people's choice as to where to focus more attention, more capital, more business over the next couple of years.
What about the path forward overall, Jim? What is your thoughts there?
Well, there's no question there will always be an oil industry in your and my lifetime. I saw where Michael Moore, who has never been a friend of the fossil fuel industry, now has a documentary out pointing out the issues with renewables. We can't recycle windmill blades. If you think a well site is not attractive, wait till you see open pit mining for copper and lithium. And disposal of batteries is a bigger issue today, I think, than most of the environmental issues we have in the oil and gas industry. And that's starting to come to the forefront. So going forward, it's going to be a smaller industry. It's going to have to be a much more efficient industry. Automation, robotics, artificial intelligence, machine learning, doing more with less is going to be the goal. The overriding goal, though, is going to be generating positive returns on capital. If it costs you 10% to borrow money to operate and you're only making 5%, by definition, you are losing equity value. And until the oilfield service industry overall figures out a way to generate returns in excess of their cost of capital, there is no way forward. And that's why I say the focus on robotics, automation, artificial intelligence, machine learning, these are the types of things that can enhance companies and different segments of the industry's operations from an efficiency point of view and generate those higher returns. The idea of just selling something cheap, they'll one day recognize the value then we'll raise the prices and make money. That's actually never worked in my lifetime. And unfortunately, I've been doing this for several decades. And so it's going to have to be, the way forward is going to be one of much higher efficiency and much more of a focus on profitability rather than revenue growth. We are no longer a growth industry. We are a mature industry. Remember back when we were all 18, had no responsibilities, and had a lot of fun? That was the oil industry for the last 150 years. Today, we're 39 years old, 3 kids, and a mortgage. And so we can't afford to go out and party like it's 1999. And so the reality is we are a value industry now, not a growth industry. And as a value industry, investors are going to care more about how much cash you generate and give back, and whether your returns are in excess of your costs going forward, rather than how fast you grow your business. And that's going to be a sea change for people to accept.
Jim, speaking of change and just thoughts that you have, and being a veteran of the industry, do you have any words for your colleagues in the industry as far as overall getting through this?
Well, this is my 7th or 8th down cycle, depending on how you look at it. And I had hoped after the 3rd one it was my last one, so I wasn't right there. And so understanding that there will be an industry coming out the backside of this, I think that's the thing to focus on. I know it's hard for people to lose their jobs or take pay cuts or be furloughed, but when you look at what's happening with COVID overall, we are by no means alone in this battle. And while OPEC plus putting production back on tanked oil prices to begin with, the real drastic impact was the loss in demand from COVID. So a lot of this is because of COVID-19. And like I say, there's a great deal of pain being felt. We know that there's going to be an industry going forward. And we know that the most talented, capable, forward-thinking people in this industry will lead us out. And so as long as everybody tries to focus on those things, keep their nose to the ground, work hard, take any job you can to stay active and in the industry, and the other side, I think, will be positive for all of us. That's the best advice I can give.
Jim, we really appreciate that advice and you taking this time to share your expertise as well. Wish you the best. Stay healthy out there.
For more Hart Energy videos, follow our social media channels.